Okay, we'll go ahead and get started. Thank everyone for coming to our webinar today. We're joined by two guests this week to help answer some questions that I've gotten through emails. I've been asked at conferences and asked after previous webinars. So they're going to help us answer some of these questions that y'all have about crop insurance. And if you come up with any more during the webinar, just drop them in the chat, but we can't answer super specific questions regarding numbers and anything else that's super specific. We'll recommend you find a crop insurance agent and begin the process and ask them those questions. So our guests today, we've got Madeline Peak. Do you want to introduce yourself, Madeline?
Yeah, sure. So my name is Madeline Peak. I am in Bardstown, Kentucky. I went to school at the University of Kentucky and got my master's and bachelor's in the agricultural economics program. I'm a crop insurance agent for Bluegrass Ag Risk, and I've been selling crop insurance for 5 years now. So that's about me.
Thank you, Madeline. We're very happy to have you. And we also have Lane Webb. Do you want to introduce yourself, Lane?
Sure. So I'm Lane Webb. I am a risk management specialist with the Risk Management Agency, which falls under the U.S. Department of Agriculture. I am the whole farm / microfarms subject matter expert here at RMA. I've been with RMA for 8 years, retired from the Air Force after 21 years in 2011. Did a couple of a year stint there with Social Security. I'm from a small town in Dresden, Tennessee, Northwest Tennessee. And what I like to say to everyone is I am the third party cause of loss. I'm the guy that drove his truck through the cornfield without ever knowing what the repercussions would be to my need to party rather than do anything good with my life. So here I am. That's my little joke. As I'm a crop insurance guy, I'm an aircraft mechanic in the Air Force, and here I am in crop insurance. But that's me in a nutshell.
Well, we're very thankful that you're both here with us, and so I'm going to start off with some questions about the microfarm policy that we've been asked. Since you mentioned that, Lane. So for those that don't know, the microfarm policy is new this year for 2022. It's like the whole farm revenue policy for farms under $100,000 in revenue. So for a lot of our horticulture and specialty crop growers, a lot of those fit that bill. So our first question about the microfarm policy is, does the microfarm policy include value-added products like pickles?
So I guess I'll answer that question. So the simple answer is yes. And that is one of the differences between the microfarm policy and its overlying policy provision, the whole farm policy. So under whole farm, value-added or post-production expenses could not be included in an expected value for insurance purposes. However, the 2018 Farm Bill allowed us under the microfarm concept to cover things such as value-added and post-production expenses. Now, they do not have to be included when we're talking about that, but they can be included from a revenue perspective. And to kind of go back what Dakota said, Microfarm is a 2022 brand new program, and it is up under the Whole Farm Revenue Protection Program. A lot of the whole farm provisions apply to microfarm. Microfarm is full of exceptions, if you will. And when he talks about the $100,000 revenue limit, that is the approved revenue limit, which is after any kind of adjustments that have to be made to what we consider allowable revenue. So that's one of those things. It's a post adjustment number rather than just looking up at your straight revenue coming in. So we have to. There's a lot of adjustments that have to be made before we get to that number.
Okay, that sounds good. So our next question was, can I use my organic prices for the microfarm policy?
So So I'll answer that question again. So that's a great question. So Microfarm, the coverage is established based on history rather than looking forward. And I say that because if you have a history of growing and selling under an organic practice at that price, you know, that you would typically see an organic crop grow or sell for, then historically, yes, the organic prices are going to be built into your coverage. So that's what I'm saying. Looking backwards, then yes, organic prices are within that number if you've historically sold at that price, because Microfarm from an expectation standpoint doesn't look forward on pricing. Your expected value per acre, if you will, is based on a 3-year history. So again, the simple answer is yes, just based on the way the expected value is established.
So it looks more at what you've sold total for in the past versus individual commodity prices.
Yeah. So and that's yes. So I think it's one of the next questions too. I can't remember, but looking backwards, so 3 years of history, we do an average revenue number based on those 3 years of history, and then the average number of acres that you've planted or is on your farm operation over those same 3 years, and we create an expected value per acre based on those two numbers, and that would be your expected value moving forward for your insurance coverage. And then of course that would be adjusted for market trends and, you know, crop mixtures and things like that. You know, the agent and or your company would take that into consideration and make some adjustments if they needed to for that. So if you're a historically organic producer selling at an organic price, then your history would then include that organic price looking backwards.
Sure. And kind of going off of what you touched on in the first two, someone said, I am currently under $100,000 in revenue, but I plan to expand in the next few years. Should I go with the microfarm policy now and switch later, or will I be allowed to keep the microfarm policy even if my revenue goes past the $100,000?
Perfect. And that's another great question. And that's one that I've answered over several of these types of meetings and Q&As. So yes, again, the answer is yes. So Microfarm has been established with this low revenue number, this $100,000 limit, to help these farmers that, you know, are small and to get into a crop insurance program with minimal paperwork, and I say paperwork, records requirements. So yes, so as someone that's less than 100,000 or right at that $100,000 limit, Microfarm does have a built-in expansion, if you will, provision within it. So what we say is in your first year of insurance under the Microfarm policy, your limit is 100,000. However, moving forward, your limit is 125. So if you took a 2022 policy out with a $100,000 limit, a 2023 policy would allow you to expand, if you will, your operation and get up to $125,000 limit there. Now, and that being said, so even under the first year, I'm going to kind of go into the weeds just a little bit here. So even that first year, if you're at that 100,000, say at March 15th, which would be your sales closing date, and you grew during the year, that's not necessarily going to kick you out of the program. What we do is when you come in and report your acreage in July, and we find that maybe your expectations are a little higher now, well, we're going to still limit you to 100,000. So that's a limitation on approved revenue, not a limitation on your growth. And then over the next few years, if you grow beyond that 125,000, hopefully you've talked to your agent and your company about these things. And this is a conversation that like someone like Madeline could have with you on what type of paperwork would I need to step into the whole farm program. And this gives you that opportunity to start tracking and to start developing these records that you may need for whole farm that's different than the microfarm policy. And those are these records that require commodity level reporting. What are you selling each commodity for? How much of each acre or each, how much of each are you growing? And what are your expectations moving forward for all these? So this is a program that helps you get into the program, start developing these records. So if you do grow beyond the program, then you can step into the next, which is the whole farm revenue protection, and have even greater coverage with a little bit more record requirements.
That's a great answer. And you actually touched on our next question, which was, when is the microfarm policy application deadline? And you said that was for March 15th. We also were asked, when should I purchase crop insurance? So those two kind of go together. Madeline, do you want to answer that one?
Yeah, so March 15th is the sales closing for the microfarm policy. And then I think Lane had talked about, it also depends on the way you file for your fiscal year, can change that sales closing date, Lane. That's
So yeah, so typically, yeah. So sorry about that. So yeah, so for a calendar year or early fiscal year filer, and we're going to call them, and that's anywhere from anything. If you're filing your taxes anytime before September, I believe is the actual when we become a late fiscal year filer. Now this doesn't really apply to Microfarm for 2022 because the late fiscal year filers, we missed that sales closing date, which would have been 11/20. But typically for Kentucky, I believe it is going to be March 15th across the board for just about everyone. Sorry about that.
I will say, if microfarm and whole farm is something that growers are very interested in, it's better to start early, start thinking about that and talking to your agent or whoever you want to communicate with. If that could be me, if you want to work with me, I'd be happy to work through this with you. But if you already have an established relationship with somebody else, talk to them now, because as Lane has touched on a little bit, these policies can be paperwork heavy as far as the records that you need to provide to get the policy written. And then I think you said the other question was, when should you purchase crop insurance?
Yes.
While there is a sales closing date, I would recommend, if you're taking a risk and you have crops out there that are unprotected, if there's an insurance policy out there to be able to cover that, to cover your break even, you should be considering crop insurance.
Yeah, that's great to mention. Yeah, if you're risking your income or your livelihood on these crops, would you not want to protect that and kind of push some of the risk off of yourself? And so that leads into another one. Who shoulders the risk in crop insurance?
So that's a kind of a three-part deal for who shoulders the risk. It's between you as the grower, you're paying a premium for that crop insurance, the crop insurance company itself. So AIP is a approved insurance provider. There's, I think there's like 10 or 11 providers now. I know there's quite a bit. There used to be way more, but they've started consolidating and each other buying companies up. And then there is the federal government as well. So they write the policies, or not write, but they set the guidelines and the AIPs write the policies. But there's a subsidy there that the government helps pay for part of that premium so that it's not solely on the AIP or the farmer themselves. I don't know if Lane has anything further he'd like to add to that piece.
So I'll add to that just a little bit. So, but you did a great job there, Madeline. But so from the subsidy standpoint, it varies depending on, of course, it depends. I'm talking about normal multi-peril here, but it would depend on unit structure and things like that. Under whole farm, it also varies based on the number of commodities that we consider qualifying, and there's a threshold you have to meet depending on how many commodities you grow, what that minimum number of that dollar amount of revenue you'd have to earn in order to be considered a commodity, and it would vary based under whole farm. The subsidy level would vary based on that number. Under microfarm, we made it even simpler. We automatically give you 80%. So it's an automatic 80% subsidy level for whole farm, meaning that as a producer, you would pay 20% of your premium. The government picks up the other 80% of that premium. To go above and beyond that, if you're considered a beginning or veteran farmer or rancher, there's an additional 10% subsidy out there. So that could save you even more money if you are considered by definition one of those types of producers. And I believe for beginning farmers and ranchers, under the whole farm concept, under the whole farm program, which would be also for microfarm, I believe it's as long as you haven't or been in the business of farming for 10 years, I believe is, and don't quote me on that. You'd have to get with like Madeline or someone. They would have to make that determination. There's some paperwork that goes along with that. But I believe for a beginning farmer and rancher under whole farm, there's a 10-year limit on that, which is a lot of time to be managing a farm and not really get credit for it, if you will, from an insurance standpoint. But it's 10%. It's 10% subsidy extra on top of that.
That's great for. Yeah. Go ahead.
And I'm sorry, and I can't state how many companies are, because like Madeline says, they keep consolidating and taking each other over. I think, like she said, there's probably 12 out there, I think, right now. Used to be up to 17, 18 of them.
Sure. So you mentioned the beginning farmers. So what if you've only been growing for 2 years? Do I have enough records?
So under the microfarm policy, unfortunately, no, 2 years of records would not be enough. We require at least, the policy requires at least 3 years of history. And I say history, tax filing history for that farm operation in order to be considered eligible. That's one of the eligibility requirements for getting a whole farm policy. With those 3 years, we do create a 5-year history, but at a minimum under microfarm, you need 3 years.
Okay. And kind of going off of that, someone said, we bought a farm and we're going to be growing the same things as the previous owner. Can we use their past records to get insurance?
Another great question, because we actually have a provision written right into the whole farm policy that deals with these types of takeovers or requirements, or however you would like to say it. So microfarm or whole farm would require at least you obtain at least 90% of that farm operation. So if you bought a farm off of someone, as long as you obtained at least 90% of that farm operation, which includes the facilities and the land, then with the previous owners or previous person's permission and approval, you could use their tax records to create your history. And if you have your own history on another piece of farm or something like that, you combine these two. If that's just going to be your history, that would be your history. And that would be until the point that you create your own history, right? Now, the thing that goes along with that, of course, and Madeline can probably speak to this a little bit, probably not this specific piece, but that other person has to provide those records. So, and then any kind of supporting documentation that may go along with those records. And sometimes that becomes the difficult part is that piece of it. But 90% rule would be in effect, and you have to have the other person's permission by sales closing date to use those records and actually get those records from the person.
Sure. And we were just asked in the chat, so what type of insurance, if any, can you use if you're in your first year of farming?
That's a good question. I do not know the answer to that. You may check out the Farm Service Agency's offerings, their products. I don't know if NAP, which is the
insured disaster.
Yeah, so if you're not familiar, I can't remember. It's the disaster program that they have, but it's a non-insurance disaster program they have. But They may, without history. I don't know for sure. I can't answer that question specifically. Yeah, there's no substitution for history under whole farm or microfarm. So unfortunately, other than like the question stated, you're taking over another person's operation, and then you have that history as long as they're willing to give it up.
Sure. Okay. Let's see. And another question we had was, what should an insured farmer do once a crop loss is recognized?
You have from 72 hours of discovery of the loss, you need to notify your agent of that loss, and then they'll submit a claim in the system. And then once that claim is submitted, an adjuster will be assigned to the claim, and then they will take over, reach out to the insured, and start getting the proper documentation of what that loss is. And they'll get all those records together, that gets submitted to the company, and then the claims processor walks through all the documentation, verifies like that before a claim check is ever potentially written if they deem that the loss is an insurable cause of loss.
Great. And another one, we've got a little time for a few more. So can I choose not to include some crops in a whole farm policy?
So under the whole farm concept, no. You insure all or none, basically is the way it lays itself out there. And me and Dakota and Madeline were having that conversation just before about insurability of crops under whole farm. There's very, very little that's not insurable under whole farm. Unfortunately, you cannot pick and choose which crops or commodities that you're producing that you can insure. Unfortunately, you have to insure everything that's considered insurable under whole farm. And similar to microfarm, like I said, microfarm is not at the commodity level or crop level. However, we're looking at total revenue over total acres is what we're looking for there. So you end up insuring everything anyway. So if everything is reported under your tax forms, Schedule F or what have you, then it's considered insured under the microfarm concept as well.
Perfect. And the last one, I haven't started selling yet because my trees are not producing yet, but I'm planning to sell them in a few years. Can I get insurance to cover them? And I do think this was referring to fruit trees, so they were planning to sell the produce from the trees.
So this one's a little tough, right? And this is kind of one of those case-by-case things, right? And I think it would really be dependent on whether or not you already have farm revenue in your past. So if you already have a farming operation and are filing farm revenue for at least 3 years under a microfarm policy, then this would just kind of catch up with you eventually once it becomes part of your history or your expectation for the year. This is one of these commodity mixtures I'm talking about that an adjustment could be made. So if you're typically sell some row crops, if you will, and that's all the history that you have from a total revenue perspective, but you know some trees are going to be coming into production in the current year, the insurance year, you let your agent know and the company, and they could make an adjustment based on what they think the revenue may be from that production. And that's where it kind of gets a little bit creative and tricky, and that's where your agent and your company have to work with you to determine that everything is kosher, I would say, or up to snuff, and you guys all agree on what that looks like. So that's a tough one, and that would be one that you would literally you would almost have to just sit down with. I mean, and it would depend on whether or not you already have established history, that 3 years of history already from farm revenue to be considered, a tax filing entity that files farm revenue for eligibility purposes.
Okay, thank you both so much for answering these questions and giving our growers some insight into crop insurance and hopefully putting them on their way to hopefully purchasing crop insurance.
Absolutely.
No
It was a
problem.
pleasure.
Thanks for
Thank
having
you.
us.
And we will be posting this on YouTube for you to go back and rewatch. And if you've got any more questions, you can email me at dakota@kyhortcouncil.org, and I can get with Madeline and Lane and try to get these new questions answered for you. Thanks so much, everyone.
Perfect. Thank you, Dakota. Thanks all.
Thank you.